Welcome everybody. Just got a few minutes to wait for everyone to join the question answer session. Super excited to get started with you guys. Please just give me a thumbs up in the comments if you can hear me loud and clear. And we're experiencing a bit of load shedding, so we had to be a bit innovative with the lighting. So just give me a thumbs up if you can see me as well. Luri gave us a thumbs up. Can see you guys are nice and early. Hillary Nwaibo, got TWT, gave us a thumbs up. Welcome everybody. Welcome guys. Please give me a thumbs up. Please give me a thumbs up if you can hear me loud and clear. We'll be starting in about 2 minutes. We're just waiting for everyone to join in. Please just hit it in the comments if you were part of the last few webinars that we started a few weeks ago. If you were part of webinar 1, if you were part of webinar 2 and 3 and 4, so I can know who is part of the webinar today. Give me a comment in the comment section if you were part of the webinars. Okay, Jaftan Malo was part of the webinars. Anyone else, guys, that was part of our webinars? Anyone else that was part of our webinars? Webinar 1 to 4. Okay, I think we can get started. How's it, guys? This is Prince Mkokeli Mampofu. and this is our question answer session brought to you by Octa FX. So guys, we will be having an opportunity to cover a lot of the questions that we had in the first few webinars, webinar 1 to webinar 4. So I'm excited. If you guys have any questions for me, please get them ready. Get your pens and papers ready and get ready to start asking as many questions as you can, guys. So also just keep in mind that um, you can ask any questions regarding OctaFX, fundamental analysis, technical analysis, um, and anything that we've covered in the last 4 webinars. So please, guys, just give me a thumbs up in the comment section if you're ready, and if you're ready with your questions, just give me a thumbs up so we can get started. All right. Any questions, guys? Any questions before I get started with some of the few main questions that people generally ask, so we can get started with our question answer session? All right, let's kick it off. Okay, so generally people ask, how do they start with their trading process? So obviously, guys, the most important thing is to find a broker that we can trust. All right. So as we are hosted by OctaFX, a trustworthy and reputable broker, the number one thing is to look for a reputable and trustworthy broker such as OctaFX. And then once you have found one, you can then open an account with OctaFX. So obviously you can hit www.octafx.com on the on the web page, and you will find an area like this. All right. In this area, you can then log in and get yourself started with the process of opening an account. Secondary to that, you could download the OctaFX app, which is very convenient, that you can easily use on your phone, and it can really assist you with your process in getting started. So I'm just going to assist you guys. So it's you can just download on your OctaFX on your cell phone, on any of your devices, the OctaFX app. And once you downloaded the OctaFX app, you will find an option, an area like this, all right, where you can then choose your account. Okay, guys. So there's a MetaTrader 5 and MetaTrader 4 options that you can choose out of, which gives you the convenience of that. All right, and then obviously, as you can see on the OctaFX MT5, there is this, it shows you the spreads from, in terms of the pips. It shows you the minimum deposit. All right. So once you have picked one of the two, you then find yourself at the next area, which is the OctaFX MT5 settings area. All right. So then you've got an option to choose between your demo account and your real account. So once you've chosen your real account option, you can then click the currency of your choice that you would wish to trade in. All right. So you've got the euro option here, and then you've got the USD option here. Okay. And then you have your leverage option here. Once you click down on this scroll area, you can then pick which leverage is more suited for you. All right. Once you've got everything set out here on the settings of your MT5 settings area, you can then click on create account. All right. Once you click on create trading account, you will then have this option, this page will pop up, and then you will have your login details. All right, as you can see, for example, here you've got the login details 6133919911, and then you click on deposit when you're ready to open your real account. All right. Once you have clicked on deposit, you have all these amazing payment methods. All right. Welcome, guys. Welcome, guys. All right. I think we've got some questions here. When do we know when to buy and sell? All right. I'll be touching on that in a second. All right. Um, so you've got all these payment methods from your South African local banks to Bitcoin and your Netla, your Ozo, all the way down to your Visa options. Once you've chosen your Visa options, you can then deposit, guys. Okay. All right. And then once you've deposited, you will find yourself in this area, and then you can click on trade, and then you're ready to go. Okay. Okay, Sinbad is also when. How do we know when to buy or sell? All right, so there are two different methods that you can use, but I'm sure after this webinar you will take the opportunity to go through webinar 1 to 4, where we were speaking and covering a majority of what you're asking about from fundamental analysis, which is the news releases such as economic news releases and so forth and so on, political news releases that affect the different currencies that we trade. All right, so you can use that as an option. So you can find those fundamentals by going on your website. All right, and then you click www.octafx.com, and once you have found your page, the OctaFX website page, you can go on to analysis, and then once you've gone to analysis, you click on Forex news. Once you've clicked on Forex news, you go to economic calendar. And then once you go into your economic calendar, you will have your different news releases based on your time zones. All right. So hypothetically speaking, today we would have had a lot of Canadian news on the New York session. The New York session starts at around about 2 o'clock to around 11 p.m. All right. So you've got the Canadian dollar, you've got the US dollar, the Canadian currency, you've got the US currency, and they've got the euro that came out today. And then you could just click on these, and then you would get different news releases on whether the market, what has been happening fundamentally in the markets. All right. Obviously, we covered a bit more on how you can get into details on how to forecast the what the market will be releasing on that day, whether the news will be positive or negative. Obviously, on this page, it shows you the previous news releases, and it shows you the actual releases, and then shows you the forecast. All right, it shows you also the impact of the news, whether it's high, medium, or low in impact. And then based on that information and the information that you can read on this news, which is past news over here, you can then get details on whether to buy or sell that currency based on the news release that you received that day. All right, so that's option number 1, fundamental analysis. The second option, obviously, is then technical analysis, which is then um, reading price action chart, which is looking at your data. All right. So these candlesticks, as they form, indicate whether the price is moving down. As you can see, these black candles are moving and forming towards the downward momentum. And then we've got the white candles that are moving to the upside. All right. So technical analysis is basically reading historic price action data and then making a deduction based on how prices previously moved on whether price will continue to the upside or to the downside. Okay. So please make it a point that you go through um, webinar 1 to 4 so you can get more in-depth information on that. All right. So for example, here I've got a few analysis that I've been looking at on my trading view. So obviously, as people that were part of the previous trading webinars or previous webinars that we had, we spoke about different market patterns and structures such as double bottoms, which are reversal candlestick formations that indicate that the market is ready to make its bullish move and that show that the market is exhausted its support, its downward momentum, and has found a support at a certain price area. All right. So as you can see, the double bottom here that is structured has broke out of its neck area and then bullish ran strongly to the upside and then create another double bottom and continue to the upside. All right. And as you can see, we've got a bullish pennant here that broke out. And we're obviously waiting for a breakout of this structure to indicate whether we're going to continue with our buy move or wait for this consolidation to end or break to the downside or trade in between this level. All right. So to answer your question, you can use fundamental analysis. You can use a technical analysis to trade or to find buy or sell opportunities. All right. Some people prefer to use indicators as well. For example, when indicators cross, such as if they've crossed here, is a strong indication of sell in the market. When they cross to the downside, such as so, and also when they cross to the upside, such as you can see here, is also an indication of the market moving to the upside or to the downside. And some people also wait to see whether the market will find resistance above or below these different moving averages. All right, so these are different options and different ways that you can analyze your markets and find sell and buy opportunities. But the number one important thing here, guys, is to make sure that you backtest every different way, every different method that you use to trade the markets. All right, whether it's fundamental analysis, whether it's technical analysis, the important thing is to make sure that you go through the historic data of your method by applying it through backtesting. And then after you have successfully backtested that method, or you found that it fits your trading strategy, or it fits your trading style, or your emotions, and then you can use that method. All right. Okay, let's look at another question. How to manage to start trade with a small amount? Okay, so the key thing when trading with small amounts, also it applies, guys. If you want to protect your funds, whether small or big, the key is risk management, guys. All right. So we've got different tools that you can use to manage your risk. If you've got $100, you know that you can, for example, risk 1% of your account per trade, or 5% if it's a smaller account of your $100. When you risk, you know that each trade that you take, each opportunity that you take, you're risking $5 to on each position or each trade that you take. All right. So you can apply that by making sure that you have your stop losses in place. All right. So let me just go to the live chart and just make an analogy for you guys that will be practical. So, for example, on this chart, on this account, we've got $1,000. All right. So with $1,000, we can risk, let's say 10%. Let me try. Right. So I've got my Forex calculator here. Right. So I pick my currency. I've got Euro, USD, and then I've got my account balance, which is 1,035, 1,035 USD. All right. So obviously I'm risking 10%, 2% of my account. So once I've done my analysis, for example, in this scenario, I would then be potentially waiting possibly for a break out of this area here. Oh, sorry. So once I get a breakout, I would say, let's say hypothetically speaking, I'm waiting to make an entry at level 1,09745. That is 1,09745. I'll go back to my calculator and say my entry is 1,09745. 745. And then I would say my stop loss is going to be at this level here, 1,09521. And I'll place 1,09521. And then obviously I'm risking 2%. And then I'll click on my risk calculator. It would then give me my lot size 0,09. I go back to my chart. I place my pending order by stop. Let me first 0,09. I place my buy stop. Accept. See, I've got my pending order for my buy now, and then obviously, and then I'll come modify and I'll place my stop loss, which is 1,09521. 09521. There you go. And then I've got my stop loss at this level and I'm risking exactly 2%. So to answer your question, the key thing is to always calculate your risk Make sure that all your trades are calculated, and each position that you place, you have calculated exactly how much you're planning to risk. But also, risk to reward is important. So for example, in this scenario, if I say 1-to-1 is my target, if I'm risking um, if I'm risking $20, I would have to place a take profit in an area where I would be making $20, which is 1-to-1. Or hypothetically speaking, my target area would be 1-to-3. That means for each $20 that I'm planning to lose, I'm planning to make $60. So I look at the next support resistance area, which is at 1,118. And if that's 1-to-1, and then I would then place my take profit at that area, 1,118. Place my take profit there. Then obviously I will have, hypothetically speaking, a 1-to-2 risk to reward ratio. Okay, so let's say $40 would be 1-to-2, so my take profit would be here at this level here, right, which is the next level after this area has been broken, right? So 1-to-1 would be more or less at 1,118, and then 1-to-2 would be above slightly at this area. Okay, so the key is to manage your risk. The key is to have a good risk to reward ratio. Whether you've got a small account, whether you've got a big account, the number one priority is to always make sure that you're protecting your capital. Okay, guys. Okay, so D3, it says, hi, so which leverage do you choose as a beginner? So it always goes back to your strategy. It always goes back to your risk appetite. But whether you choose 1-to-500 or 1-to-300, 1-to-200, or whatever your leverage may be, the number one priority is to manage your risk. Okay, 1-to-500 gives you leeway to whether you want to adjust your strategy to more aggressive approach than a subtle approach, but obviously depending on your opportunities. But the priority, as I've mentioned, number one here is to always make sure you've got a healthy risk management strategy. So if you say you're risking 2% per account or 5%, you stick to that risk management strategy. All right, you stick to that risk management strategy. Okay, right. So how long would you recommend a beginner starts be on a demo account? I know it's different for everyone. Apologies if I have mentioned this on a previous webinar. This is my first. Okay, no problem, guys. Don't be scared to ask questions. Ask questions all you can. Okay, please, the more questions, the better, guys. Don't be shy. All right. So everyone is different. Just like every student, when you're learning to drive a car, not everyone will learn at the same pace, and not everyone will grasp things at the same pace. The key thing is to make sure that you for example, can be consistent and being profitable for a certain period of time. Some people actually learn better trading live accounts. So, for example, if you've got $100 that you are willing to risk in the markets, then you would risk that $100, and based on that $100, you can learn how to manage your risk, because also there is the emotional aspect that comes into play. All right. So also most of the time, also it can trading a demo account can also be, for some people, depending on their characters, can be a deterrence, because the emotional aspect isn't in part of the whole trading process or the trading experience. And then when they start trading real money, it becomes a problem. And when the emotions get involved, they're not used to risking real money, and then they end up making unnecessary mistakes. So I would suggest you personally. What I did, I used the demo account to back test the different strategies that, for example, we taught on this previous webinar, previous webinars. And once I back tested and I felt I was comfortable and I was easily able to identify the different market structures that I needed to find in order to find buy or sell opportunities where support and resistance zones. Once I was successfully able to find those different opportunities on a demo account, I then went on to a live account, but I started with a humble amount, an amount I was willing to risk in the markets. All right. So luckily for you guys, we have a beautiful broker, Octa that has minimum of $25 that you can start trading with and use to kind of test out in the markets and kind of build your muscle. So just like you learn how to drive, as much as you can learn in a park or in a driving school, but once you get onto the road, emotions get involved. So it's good to get onto that live account also to kind of learn how to practically apply everything on a real scenario. Okay, I hope that answers your question. So we've got a question from Kwanga. How to know if a breakout is a false or a true breakout? Because sometimes the candles can break out a resistance or support with momentum that symbols an entry point, then it takes out the newbies. Very true. I'm so happy that you brought this up. So let me take this down to, okay, so I'm just gonna show you an analogy of horizontal support and resistance, and then the diagonal. All right. So as you can see, we have a breakout candle here. All right. Let me just mark this area. Please guys, just give me a thumbs up if you can see everything I am explaining here in the chart. So we've got a clear breakout of this area here. All right. So we've got a support zone at price level 0.90355. Okay. How did we identify that? Because price was moving from the upside to the downside, resisted once. As you can see, we've got a false breakout here, moved to upside, came back, found support once more, moved up, found support again, moved up, found support again, identifying this area as a clear area of sensitivity. All right, which shows us that the market are clearly finding a strong support area at this area. Okay, so now what are we looking for? We are looking for a clear breakout. So as Kwanga mentioned, most scenarios that we find is that the market break out of this area, and then once they've broken out, majority of traders then place their sells, and whilst the market has closed below this area, it then pulls back and stops people out. In other words, hits your stop loss and then continues with the move to the downside. All right. So now, how do we avoid this? The first thing that we should look for, or the first indicator that we should look for after the breakout, is another candle, which is a confirmation candle that closes above the support area. All right, so we've got 0.90355 as a support area. So what do we wait for after the breakout candle? We wait for a confirmation candle. All right. So as we can see, we had a breakout candle, and after that breakout candle, we had a confirmation candle. All right. So after you get your confirmation candle, ideally I would say you wait for the market to run, and then after it's run, it should give you a full retest of the previous support area. All right. Then changing that support area into a resistance. All right, so if the market is moving to the downside and it broke out, we wait for a confirmation candle. After the confirmation candle, we then wait for a full retest and respect of the 1,0355 area. Once we get a full respect of that area, what do we then do? We then place a pending order below where our candles ran down, all right, before they went back to retest. So for example, the market pulled down, broke out, ran to the downside, created a double bottom, went back up, created a candle a structure here that candlestick support, a bearish candlestick formation or a wick that respected this price area. We then place our sell order below this area. All right. So when the markets do move aggressively and they trigger us and move with a strong bearish momentum to the downside. All right. Does that make sense, Kwanga? Please give me a thumbs up if that makes sense or if you need more clarification. So I'm just going to go over that again. What do we do? We've identified the area of support. Once we identify the area of support, we wait for the breakout candle. Once the breakout candle has formed and closed below the area of support, we then wait for the confirmation candle. So guys, what does this all mean? It means if you do not have patience and you're trying to chase trades in these scenarios, you will always be caught out. All right, so the key is to not chase the trades, wait for your indicators, and once your indicators have all came together as a beautiful confluence, you then place your order and wait for the market to come to you and trigger your sell or your buy. All right. So in this scenario, we waited for our breakout candle on our confirmation. The market then ran. We waited for the market to come back and show a clear support or a clear resistance at the previous support area turned resistance. All right. And then we place our sell pending order below the area where the market moved before it reversed. Okay, once we place our pending order, as you can see, the market gave us a strong bearish candlestick that went to the downside. If your order was below here, then you would have nicely been triggered. If your stop loss was above this area, you would have had a nice 1 to 3 trade here, and you would have came out with a beautiful profit up there. All right. Okay. So Kwanga's got another question for us. How do we know if a hammer or a shooting star is a false or true? Because sometimes they appear, but they do not get respected by the market. All right. Beautiful questions. Kwanga, I'm very happy about your questions. So let's look for a candlestick formation here. Okay, let me just give look for a nice structure here. So for example, we've got this bearish engulfing candlestick formation. All right. The best way, just so you, first thing that you need to remember is that majority of these structures, majority of these patterns, nothing is guaranteed in the Forex market. All right. But all these structures give us is high probability of the market moving to the upside or to the downside. All right. So for example, we've got this beautiful hammer here. All right. So when this hammer has formed, this bearish hammer here has formed, the best way to then make sure that you don't get caught on a reversal in case this market moves to the upside after this candlestick has formed is to then place a pending order a few pips below this the candlestick. All right. That way, if the market moves to the downside and triggers you, high probabilities that the momentum of this candlestick will be what will be moving the next the next candle, because buyers and sellers are watching as these candles form. So if we see as a lot of sellers are seeing this candlestick form, the bias of the general market sentiment is saying the market is bearish, and most likely the market will move to the downside. The same thing applies. Once this bearish engulfing candlestick has formed, what do? We then place our sell stop below the bearish engulfing structure here. All right, which then indicates our market is bearish. So when the market then triggers it, most likely, most high probability, chances are it will move to the downside. Okay. So these same things apply, guys, with these different structures. Let me just, yeah. For example, we've got a beautiful double bottom structure here. So obviously, we've got a beautiful double bottom structure here. Once the double bottom structure is formed, we then wait for a breakout. Once the market has moved to the upside, if you miss, for example, in this scenario, we have the market move to the upside. If it doesn't give you a retest immediately, you miss the trade, let the market move to the upside, wait for the retest. Once the retest is formed, as you can see, there is a previous resistance turned new support area here. Once the structure has formed, we then wait for what? We wait for a breakout to the upside. So remember, this area is now the new support area. What do we wait? We wait for a breakout of this next structure here. So as this bullish structure is formed here, this bullish channel, we wait for the breakout and then place a pending order above this area here. And then that will give us a high probability of a bullish move to the upside. So this applies whether we are talking horizontal or we are talking diagonal um, trend lines. Okay, guys? So the key is wait for the breakout, wait for the retest. Once you've gotten your retest, you place your buy order above the structure that the market gives you. Okay, hope that makes sense, Kwanga. So this is the higher probability structure or setup that you can use to make sure that these fake outs, you don't become a victim of them. So if the market would hypothetically pull back down before here, then you know that you didn't place a pending order for you didn't place a pending, you didn't place your buy early, and you don't get caught in a scenario where you enter the trade while the market is consolidating. You wait for the breakout, and then once the market is ready to make a strong move, then your buy order is triggered, and then it moves to the upside. All right. Okay, Kwanga's got another question. How to master the 2% rule to a 98 to get 98% profit? Because sometimes the market hits my stop loss, then goes back in the direction predicted, and I've already lost the 2%. So the key is to, as I mentioned, have a solid risk to reward ratio. If you've got a good risk to reward ratio, you need to you will understand that whether you do make losses, but your profits will always cover the losses that you have made in the market. All right. So for example, if you're risking 2%, you're risking each trade for the 2% that you have lost, you're looking to make 6% on each trade. All right. So that is an important. So for example, if you take 3 trades, you're risking 6% to make 18%. All right. So even if you do make losses, which are inevitable, you can manage your risk. So you make sure that at least, even though you are still making your losses, you're still covering your losses with your reward ratio. All right. Please, guys, bring all the questions. Bring all the questions. I want to answer all your Forex related trading questions, guys. Um, So please, guys, make it a point to go into the the comments, the 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 description, and while you're in the description, you can find more of the webinars on the bio here, or on the description. So just register and be part of the community. Just register and just go over all this information so you can take full advantage of all these opportunities. Okay, take a full advantage of all these opportunities, guys. All right, any more questions, guys? Any more questions? Any more questions, guys? Okay, so we'll just be covering a little bit more about how to trade on the app, all right? And with what amount should you start trading? Okay, so as I'd mentioned, you can download the OctaFX app. Once you download the OctaFX app, you can then click on obviously your MetaTrader 4 or 5 options, which I previously spoke about, and then you can go on start trading. Then obviously you've got your demo and you've got your real account. Once you've clicked on your real account option, you will then have all these different instruments that will open up in front of you guys. Okay, once all these instruments have opened up, you can then click on the instrument of your choice, and then you click on trade. Once you click on trade, or once you click on your instrument, you will have all these options, and you click on trade. Once you've clicked on trade, you can then place your buy or sell order. All right, so this is how you can place a trade on your MetaTrader 5 on your OctaFX app. I showed you guys how to place a trade on your trading platform, on your MetaTrader 5 on OctaFX. You can either right click, place your buy or sell limit, or place your new order on here by placing market execution, clicking on market execution, choosing your trading volume, which is your lot size, and then you can place a stop loss and your take profit, and then place your sell or your buy order accordingly. All right. Another way is to just click your buy or your sell order directly on here on your sell or buy option buy tabs here. Then you can easily place your orders there, or you could click on new order and then the same will pop up. Once you click down here, you can also go down on your pending orders. Then you've got your buy, sell limit, buy stop, sell stop, buy stop limit, and your sell stop limit. And then you can click on your volume and your price and your stop loss and your stop loss price, stop limit price, and your take profit, and so forth and so on. So you can easily place a trade by using those different options. Okay. Is it safe to enter at the replacement that did not respect the support or resistance level? No. Okay. So for example, in this scenario, if the price breaks out, comes back and retraces, I think that's what you're trying to explain, retraces, and then gives you this beautiful bullish engulfing candlestick, that means it's respected this breakout area, right? And retraced, and once it retraced, it respected this area. If it would then break below this area of support, then it shows us that the market is still in a bearish momentum, and then it would not be safe to place a buy order. All right. So then it would be safe to then wait for the market to give us the indicators that we are looking for in order to place a buy order to the upside. All right, so the same thing applies on the downward momentum. Same thing applies on the horizontal. If the market breaks out, if it does not respect this area, don't even think about placing a trade. Remember, we are waiting for the market to come down below the area where the market reversed. So when it moved to the downside and reversed and respected this area, our pending order is below this area. Okay. Any more questions, guys? Any more questions, guys? So just a reminder, guys. Just a reminder, guys. We have webinar 1 and 4. If you want to take full advantage of webinar 1 and 4, please, guys, go through to the OctaFX channel and take full advantage of all these different webinars. It's free information. Take full advantage, guys. You can find them on the OctaFX app as well. So just click on the link on the description and you will find all this information below, guys. Okay. Is everyone with me? Just give me a thumbs up. Just give me a thumbs up. If you're with me, just click on the thumbs up if you're with me, guys. Any more questions? Any more questions before we move on? Any more questions, guys? Okay, no questions. All right, let me just continue with my presentation. So these are just simple methods that you guys can use also whilst on the OctaFX app or on the website. on how you guys can make withdrawals. All right. So you can withdraw by clicking on the withdraw tab, um, or internal transfers. For example, if you've got money on in your MetaTrader 5, you then click on internal transfers. Once you've clicked on internal transfers, it will then give you options, all right, to move your funds from whichever account you have funded to your wallet. All right, so if you click down on this on the tab here, you will find your wallet and your different MetaTrader 5 accounts, and then you can then click the amount that you want to transfer and then the OctaFX pin that you will receive. All right, once you have transferred your funds, you can then, as you can see here, once you have transferred from your account to your wallet, you then put the amount that you want to transfer in the pin. And once you have made your transfer from your MetaTrader 5 to your wallet, you can then easily make your withdrawal. You just click on the withdraw tab, and once you've clicked on the withdraw tab, it will give you your different options to withdraw. All right. Any more questions, guys? Okay, I think everyone is happy. If there are no questions, guys, just give me a thumbs up. Just give me a thumbs up. For everyone that is planning to join our webinars, everyone that is planning to hit and join the webinars, webinar 1, 2, 3, and 4, just give me a thumbs up so you can show your guys' commitment to this process, to making sure that you guys become profitable Forex traders. Please, guys, it's fruitful information. If you want to be successful in this industry, you're gonna need to commit. You're gonna need to make sure that you are well informed and all the information is on those webinars. Guys, just give me a thumbs up if you are going to be part of our webinar, and then we can, if we have no more questions, we can end our question answer session here. No more questions. Okay, if that is it for today, thank you so much, and thank you guys for joining us on this question answer session.